Boy, boy, just like that, weekend's over. Back to work tonight, guys. Hope you guys had a fantastic weekend, but it's about that time of day ago. Last week of the month, right? Last week of July. It's Monday evening. It's July 26, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, boy, it's great to have you with me, because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background, as you can see. S&P's ready. Nasdaq, of course, is ready. And that gold, that yellow metal is always ready. Glad to see you are ready right along with us. Boy, where do I begin? Got a couple ranges on the charts. Got some real nice, strong trends. Got some big news coming for tomorrow. I'd love to buy some pullbacks right now on the S&P. Nasdaq still has a little bit more to go here. Nasdaq could potentially be like the S&P, snapping higher. And gold is range bound. We're buying low, we're selling high. We're gonna have to let the price action tell us where to trade on the gold for tomorrow. Not to worry. By the end of this video tonight, I'm gonna make sure you know my favorite trades for tomorrow, where to find them, how to qualify them, and of course, you'll know some traps to avoid, some things to avoid tomorrow to keep yourself out of trouble, whether you're trading on your own or you're joining me tomorrow morning, trading with me tomorrow in our trade room at 8 o'clock Eastern time. Now, of course, before we jump into the video tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter, my best trade ideas for the following day. We publish this all week long, so I want to make sure you don't miss tomorrow night's video. Hit that little bell icon when you subscribe to our channel so you always get notified every time we upload something new. And if you guys have any questions for me, you can always drop those questions in the comment section. I would love to answer any questions that you might have along the way, so don't be bashful about asking questions. And as always, I appreciate you guys tuning in every evening. I know we're all busy people, so thank you so much for carving out some time with me every evening on this video. If you enjoy this video as much as I enjoy making it every evening, do me a favor, hit that like button, that thumbs up button for me here on this YouTube channel. So again, make sure you subscribe, drop those questions, hit that like button if you guys enjoy the video here tonight on this channel. But enough of the intro, though. Time is ticking. Monday evening is out of the way here. Let's get ready here for Tuesday's trading session. Now, of course, as I mentioned in the introduction, would love to buy some pullbacks here on the S&P. S&P is a nice run higher here right now. Got some targets waiting overhead. Would love to buy some pullbacks. I wouldn't mind buying some really deep pullbacks, and I would also say we could probably sell those deep pullbacks as well. So lots of trades on our radar for the S&P. Nasdaq has to get something going here. Nasdaq has to see we got to see some strength going high on the Nasdaq, or else we're going to probably end up back around those lows. Now, I have no problem buying the dips and buying the rips, and I do have a potential reversal on my radar for the Nasdaq tonight. So we definitely have some great trades on both sides of the market on the Nasdaq. Gold, of course, again, is a range, right? So we're selling high, we're buying low, right? We're selling high, we're buying low, we're fading breakouts. And speaking of breakouts, right, I would love to trade a nice bear breakout, get a nice target down there, 1780. Would love to trade that kind of slingshot breakout on the gold. And of course, we may find ourselves buying off those lows tomorrow as well. So we're buying low, we're selling high on the gold, trading ranges, and hopefully we'll get some nice strong trends continuing here on the S&P and the Nasdaq for tomorrow. Now, speaking of tomorrow, we have a lot going on here this week. Let's make sure we're all on the same page here. Got a busy week. In fact, you could probably say this might be the busiest week of the summer. First of all, it is the end of the month, right? Last few days of the month of July. I can't believe we're talking about the end of July right now. It seems like we just got this year started. But the end of the month is typically a more volatile time of the month, right? So keep that in mind as we go throughout the rest of this week. Don't be surprised if we see some uptick in volatility as we get closer to Friday's closing bell. At the same time here, we are watching some key components. We've got the FOMC announcement. Of course, the meeting begins on Tuesday. The FOMC announcement is on Wednesday afternoon. That really takes a big chunk of Wednesday's trading session out of it. And as I was telling you guys this morning in the trade room, we already have a sense of scarcity going into the end of the month, right? The end of the month being on Friday, there already is a sense of scarcity, that lack of time left to get your account in position to look good at the end of the month of July. You take away a big chunk on Wednesday, and we really have a lot of scarcity in these markets this week, again, because of lack of time, right? Wednesday's FOMC meeting announcement is a big part of that. What else do we have going on right now? Boy, we got a bunch, let's see, a rollover this week. It doesn't look like it'll be tomorrow, but we are watching rollover right now on the gold, specifically between the 821 contract and the 1221 contract. We will skip that 1021 contract. At some point this week, we are likely going to see that gold rollover. It could be tomorrow morning. It could be later on this week. I don't exactly know when that rollover will be, but you will know it when you wake up in the morning, right? And that 1221 contract has more volume than the 821 contract. So be aware of that. We are watching rollover from the 821, jumping to 10 and going to the 1221. And then, of course, on top of that, we've got some earnings reports coming out this week, right? Big, what we call Tech Tuesday is tomorrow. We've got big time earnings reports from some of the biggest tech companies, pretty much every tech company you've heard of, besides, I think it was Facebook. I think that's going to be on Wednesday. All of those earnings are coming out tomorrow. So be aware of that if you are a Nasdaq trader like we are in our trade room. So again, gold rollover, earnings, right? Tech Tuesday tomorrow, FOMC on Wednesday. And oh yeah, it's also the end of the month, so expect a little uptick in volatility just to keep it interesting here this week, right? So again, maybe one of the busiest weeks of the month. We had a great start to the week this week in our trade room this morning, and we're hoping a pretty good week, right, for the rest of the week here with you guys as we go into the end of the month. As we look at the news for tomorrow, I'm going to spend too much time here on the news worksheet. We do have quite a bit of news tomorrow, right? We get the durable goods orders at 8:30 Eastern time. And of course, we got consumer prices along with some manufacturing numbers coming out at 10 o'clock Eastern time. Now, I mentioned this last week, and boy, was it correct last week. We haven't been seeing, it's summertime markets right now. So hopefully I'm wrong about this, but we haven't been seeing a lot of reaction to that 8:30 report, but we have been seeing some really nice moves between 9:45 and 10:45. Remember, when it comes to summertime trading, don't let anybody tell you can't trade summertime markets. You just have to be aware they're going to be a little bit inconsistent, right? There'll be times of good price action, and there'll be times of really poor, slow, sloppy, grindy price action. If you don't know the difference, that will be a good sign to come out and join us every morning in our trade, and I'll show you what good price action looks like compared to bad price action. I always tell my clients, trading is like riding a bicycle, right? It's easier when it's moving, right? Kind of think about that metaphor. So again, I would love to think tomorrow morning we'll get that shot in the arm at 8:30 Eastern time, but I would imagine if you could only be at your desk tomorrow for an hour, that 9:45 to 10:45 block has been some of the best price action we've seen pretty much throughout the entire month of July. So you definitely want to make sure you're at your desk and ready to go from there. Now, of course, don't forget, we're going to be in our trade room tomorrow like we are every morning at 8 o'clock Eastern time. I would love to have you there, right there with me. Had a great day today. We'll probably have some more good days strung together here this week here at the end of the month. Usually pretty good. I'll put a link for you guys to join up as a brand new member. I'll put that link below this video tonight on the blog, or also put it in the description of this YouTube video. So grab that link, get registered on our website, and I'll see you guys tomorrow morning at 8 o'clock Eastern time, and we can basically do this all together. All right, let's get back to our charts here. I apologize for taking up so much time on the news, but I did want to make sure you guys know about rollover and Tech Tuesday and end of the month and big news, FOMC, right? There's a lot going on this week, one of the busiest weeks of the summer. S&P, Nasdaq, gold is ready. A lot of bull markets right now, right? E-minis are bullish, gold is bearish. Why don't we grab the S&P first? Let's grab the S&P first, get this going here. And don't forget, I'm going to put chapters at the bottom of this video. So I would think you're going to watch the whole entire thing. But if you come back to use this video as a reference point throughout the day tomorrow, you can use those chapters right at the bottom to kind of really tune into kind of which markets are which. So grab those chapters at the bottom of the video for some help navigating. What's the most important thing right now on the on the E-mini. The E-mini is a classic example of a pendulum swing rotation. We had that big kind of low volume melt up market last week, right? The buyers, of course, came in this morning. They bought the dip, right? Got that early morning dip, and now they're trying to complete that rotation, right, as we call it, all the way up to get that pendulum swing. There's a big bullseye right now, up around that 44.28. Now, lot of bull momentum, right? Lot of bullish momentum. Anytime we see this much momentum without really much of a deep pullback, right? Not really much of a deep pullback. We have to think that anything that pulls back right now is probably going to be seen as a buying opportunity. At the same time, because we have, I mean, if you know how to read a range, the amount below the range, the amount above the range, there's going to be a sense of urgency as we try to finish off that pendulum swing. So as the market rolls higher here, we may have to get a little bit aggressive as this market rolls higher. And then if we keep going, I get that big double up target, 44, 41 and a quarter, all the way up around those highs. Now, that does seem a bit unrealistic for tomorrow, but hello, right? Look what happened last Friday. So we definitely can't count anything out right now, especially on these stimulus-induced markets right now. So we're bullish. I'd love to be a buyer. There are a couple different ways that we can do it. You know, as the market goes higher, we have to get aggressive and we have to be careful because we don't want to be too, we want to get aggressive because there will be some scarcity as we go higher here. So as we go higher, one way I'd like to buy this is with a trap pattern, right? As the market rolls higher, I would love to grab what I call a two-try trap. I'm always trying to find these new channels, right, and buy off the low of those channels. We call these number 5 patterns in our trade room, right? So a trap entry, right, as we go higher. If the market was to, for example, pull back and really blast right off the moving average, what I would do is grab a new trend line, mark off that high, mark off that low, and I would buy that first pullback, right? Buy that first pullback. Now, when I say buy that first pullback, let me be very specific. This is a 6,000 tick chart. I'm not buying pullbacks on 6,000 tick charts, right? The stop loss will be way too large. What I will do, though, is I'll drill down to a faster time frame, and I'll look for my two favorite price action setups are going to be failures, right? That's the most common, and then traps, right, off the low of that channel. Again, we're not just going to blindly buy that, right? Again, if it runs up or pulls back and jumps off the moving average here, I'm going to find that channel. I'm going to drill down to a faster time frame. Right, on that faster time frame, I'm looking for those. Usually, it's a seller failure, right, into a bear trap to buy right off of those lows. Now, I'm not going to go over all the details of the faster time frames, the indicators we use, how to find the setups, right? I go over all of that and provide hundreds of examples of things like failures and traps and all my favorite price action setups. I cover all that stuff in our Quick Start class. I'll put a link up here for you in the upper right-hand corner. We have a great shortcut course in a short period of time. It'll bring you right up to speed with how we trade in our trade room. So the next time I say, right, a two-try trap as we're going higher, you'll know what type of market conditions to look for, how to find the channels, how to trigger the entries, and you'll know how to buy that stuff, right, as we're going higher. Now, speaking of going higher here, could we sell this at all? We definitely can sell this market because you've got this range overhead, or below, excuse me, but what's the problem? The problem is we're very bullish right now. So chances are the best way to sell this, and this could really be anywhere up here, would be to wait for that pullback, right? Get that retest the high, and then look for what we call a two-try exhaustion or two-try reversal. And it's basically simple, right? Wait for the buyers to try a couple times, twice, and then look to sell into those stop losses, right? Now notice this, right? I'm not really trying to pick a top on this. We expect to see buyers coming in and buying that pullback. It's going to be difficult to get short on that pullback unless, of course, we see a really strong push down. I'm going to cover that in a second. The easiest way to sell this thing short right now is going to be to wait for the pullback, and we'll talk about how to buy that pullback in a second. Wait for that pullback. right? Once they go back to retest the high now get the buyers trying a couple times, right? Once those buyers try a few times, now their stop losses are right below that low. Again, we call these 2-try reversals or a 2-try failure. And when we're trying to go here, we're trying to go back down into that range. And then really at that point now, we can measure the amount above, measure the amount below. We can use that now as a final objective, right? Remember, the range is a balanced area, right? The range, right, is a magnet. So when we short off the high like that with that 2-try reversal, the range, of course, is an E target, but again, leave that runner all the way down on the opposite side. And again, right? And again, I drilled down on a faster time frame to find those entries, and we covered that stuff, right, in that quick start class. So now you kind of know how I would buy it and how I would sell it, right, as it's going higher here. Real quick, though, big question is, what if we go sideways up here? This does happen a lot, especially summertime markets, right? A lot of momentum right now. You know, some big news tomorrow morning at the Fed announcement around the corner here. What if we go sideways here? If the market goes sideways, what does that do? It pretty much creates a magnet right around that trading range. The best way to trade this now is to find a level of support, like a prior swing or a trend line, right? Really any support level below that range. Wait for the price to pull back. And then my favorite way to trade it is I never try to pick a top or a bottom. I like to wait for in this case, the bears to come in, try to sell that pullback. And once those bears get short on this, their stops are just a sitting duck, right? They're sitting right there to get hit. So even if we do go sideways here, right, keep an eye on that pullback. And then between you and me, another great follow-up on this is that follow-through channel. Right? So what happens a lot of times is we'll get that failure off the low. And then remember, the amount we go underneath the range oftentimes becomes a target on the opposite side. And so while we're pendulum swinging, right, we can buy that pullback. Right? It's the exact thing that we're seeing right here, right? There's that range right there. We're trying to buy it, right, as it's going here on the way to that pendulum swing. So if we see something similar up there, right, if this market rolls sideways here, I'm looking for that failure setup off support, right, below the range. And again, we'll talk a lot more about failures. I have literally hundreds of examples of that setup, right, in our quick start class in the upper right-hand corner. And then grab that new channel and then grab that pullback, right? So again, it's a failure. And then again, we're drilling down, right? We're not trading this in a 6,000 tick chart. We're drilling down and we're finding that failure setup, that trap setup, that pullback setup coming off the low of that channel. And we'll go over more of those details, right, in that quick start class. Those are some really nice trades, right, as we go sideways or if we go higher. Now, the big question is, how do we buy this thing if it pulls back? The pullback is kind of the easy one, right? If it pulls back for us here now, again, I want to get down into levels of support. Now, I really like what we're seeing right now. Strong move up, shallow pullback, higher high in price. There's a beautiful trap right below that low. What I'd like to do is get one of those trifectas, right? The trap, the failure, and the pullback combination. Right? We have three, well, in all reality, into what we call a strength move. Now, again, traps. This is a primo spot to look for a trap, right? You're right at the low of that channel right there, right? That's probably the best possible entry in the pullback here. Okay, now we'll talk about if it really pulls back strong here in a second. But that's one of the best entries right there is that trap because it's off the low of that channel. These are always really, really powerful. Now, traps are great, right? But then as we pull back to the moving average, get those bears trapped in, right? Get those bears to try to short that pullback now, and you can buy into stop losses. And then what happens a lot is we'll then, right, as the market now pushes higher, right, we'll get that moving average coming over and you can grab that first pullback, right? So again, it's trap, it's failure, it's pullback. And then if we really get lucky, right, we'll get the whole cycle, we call it, right? And we'll see a nice strong move going higher, right? 1, 2, 3, 4, and we'll trade a strength trade. Trap, failure, pullback, strength. Now, obviously, if you're here for the first time right now, that terminology is going to be very foreign to you. Not to worry, I cover all the small details, like I said, right, in that free class, right? So you'll know exactly what I'm talking about when I say trap, failure, pullback, right, into strength. Now, the big question is, what if we really pull back, right? What if this market really, really pulls back now? Then what do I do? Well, at that point, again, we still have a pretty good amount of momentum here. The problem now, though, is the strength of that pullback. You know, a good rule of thumb is if we get underneath that channel, right? If we get underneath that channel, the sellers are going to try to sell into it. And so what we want to do is let those bears try twice, right? Once, twice, and then watch closely here on this. Because once those bears get short twice, it almost always will snap higher, right? That's going to be your failure. Okay, right? So you're waiting for in this case, you're waiting for the bears to try twice now because of the strength of that pullback, right? So you're buying right there in the stops. And then as it goes higher, keep an eye out for a trap entry. You know, I would love to think we're going to get that beautiful pullback, you know, right? Pullback would be great there off that deep pullback, but that doesn't happen very often after a really deep pullback like that. So watch that trap entry, and that trap entry will also work as we keep going higher here, right? Again, it's a two-try failure because of the strength of the pullback. And again, it's a trap entry just because a lot of times when you get those bears to fail, the price will really snap higher and you may not get that really deep pullback there. Okay, that will be how to buy it as we get that pullback a little bit deeper than we'd like to get it. Now, at this point, how do we sell it, right? How do we sell this market? We already talked about how to sell it off a two-try reversal. Right? We talked about buying that pullback and then waiting for the bulls to try a couple times, right? And then hitting it, going lower. One of my favorites. Okay? What if we go lower though? How do I sell it now? I have to wait for momentum to turn. Remember, it's a very strong bull market right now, and it's been kind of irrationally bullish, right? So this is not the time to be picking tops in one of these markets. Now, what I can do is, if the bears can hold that pullback and jump, right? We call these 1, 2, 3 reversals. If the bears can hold that pullback and jump, then I can mark up that low, I can mark up that high, and I can now again drill down and I can short that first pullback, right? I'm not going to short off a 6,000 tick chart, right? The most common entries off the highs there are bull traps, buyer failures, and failures oftentimes lead into pullbacks, right? Just as we talked about that sequence going higher. Okay, so again, I don't care how strong that pullback is, right? There's nothing you can do to convince me on that pullback to get short. What I'll wait for is, do the bears try a couple times and fail? I'll be all over that, right? Or do those bears hold this thing, right, and run? If they hold this thing and jump off the moving average, now there's a big bullseye right down at those lows, right? Which wouldn't surprise me tomorrow because, I mean, we're so darn high in this market right now. It seems like at any point this market could collapse here. We're not going to predict it, though. We have to trade the reversal once we see it. Mark up that low, mark up that high, drill down, find that new channel, drill down now to your faster time frame, right? Find that bull trap, find that buyer failure, and we'll short off of that high. Now, I'm sure there's a couple things that probably missed tonight, right? There's always some curveballs in the market. So we get the basics covered here right now. A lot of this will apply to the Nasdaq as well, and we'll cover a lot of the smaller details tomorrow morning in the trade room. Just make sure you grab that quick start class, right? If you're here for the first time right now, that way we can make the most of the time together here on this video newsletter. Let's keep going here. Got some Nasdaq up next here. Over on the Nasdaq. The Nasdaq, right, would love to get what the S&P has right now because you can see what's on the Nasdaq, right? The Nasdaq has that big push up from last week. It goes into a range, right? There's your range. The range is still very much holding together here. And you can see what happened, right? The buyers took the opportunity to buy the dip, right? And now they're trying to rotate back higher. Big bullseye right now on that pendulum swing, 15,165. Big bullseye up around that double up target, 15,214 and change. There's just one problem. We don't have the momentum, right? The buyers have all of the Momo on the S&P right now, but the Nasdaq is looking pretty pathetic. Now this makes sense. Again, tomorrow is Tech Tuesday, right? It's the Tuesday of earnings season that is just littered with pretty much everybody, every tech company I've ever heard of besides Facebook, right, is reporting tomorrow, either before the open or after the close. It makes perfect sense that buyers, or really everybody for that matter, might be a little bit patient, right, waiting on the Nasdaq right now. If you knew there was a tsunami of news coming tomorrow, right, you probably would do the same thing as well. So we could definitely tell, it makes sense. It makes sense. So the market's bullish. There's no doubt about that. But our big challenge right now is we don't have the proof. We don't have that. See, on the S&P right now, there's FOMO involved. Right? Nobody wants to miss that pullback. There's been such, right? I mean, it's pretty slow, right, this afternoon, but there's been such momentum that any pullback right now will likely be seen as a buying opportunity. We've already got that, right? There was your bull move. There was your pullback. Buyers are already in, right? Buyers are already in. If you're buying pullbacks, you're already in this thing right now. So the only way we can get some fresh blood in this market is to either go higher, right, to give us something to get excited about, or we have to go lower, right, to trap in some of the bears and get this party going back up again, right, because that range is the magnet. I always tell my clients in the trade room is if we don't have a good, strong move, we have to either wait for a strong move, right, to kind of stimulate the FOMO in the market, right, the tension in the market, or we have to trap in the other side of the market and use their stop losses as fuel. Right? If we don't have that FOMO, if we don't have that strength in the market, we have to either create it by using the opposite side of the market stops, or we have to wait for it. And that's basically the plan here for the Nasdaq. Now, honestly, this channel, I have the channel on here. This channel is not going to help us out very much. This channel is there just kind of a placeholder for you because there are really two ways that you want to buy this. One would be as we go higher here, a very strong push higher. I'm going to mark up that high. I'm going to mark up that low. And I understand up around that pendulum swing. But remember, if you have enough strength in one direction, that pullback is still very reliable. Now, again, I say pullback, right? But remember, we're not just blindly buying that pullback, right? Trading is pretty easy, but it's not that easy. This is a 4,000 tick chart. I'm going to drill down to a much faster time frame, right? And I'll find that failure. I'll find that trap entry, that pullback combination, right? We talked about that earlier. If you don't know those price action setups right now, you definitely got to grab that quick start class in the upper right-hand corner. That shortcut course will bring you right up to speed with, for example, right? Another way to buy this would be as the market runs higher, if I see a shallow pullback and a move higher here, right? So if I see a strong move up, remember that creates the FOMO, right? Strong move creates the FOMO, but now we don't get a pullback and run. Now it's a shallow pullback and a higher high. Now that trap, right? That trap. I love these patterns, by the way. One of my favorites right now. And again, you can always go out, grab that channel. Okay, the channel's not necessary, but it sure as heck doesn't hurt. It sure as heck doesn't hurt. Remember, most important thing, we either need to jump off the moving average, right, with that 1, 2, 3, right, create that momentum, create that FOMO in the market. That FOMO means it's almost a guarantee that pullback holds, right? That's one way to do it. Or we have to see that strength right now, right? Strong move up, shallow pullback, higher high in price, and then trap. And again, I really don't care where that pendulum swing is if we have enough strength, right, going higher here. Okay? Now, how do we sell up here? It's the same basic idea as the S&P, right? At some point here, we'll get that pullback. They're likely now going to retest the high, and then we count twice, right? Let the buyers try once, let the buyers try twice. Now, once those bulls commit, right? Once those buyers commit up here now, right? They're not getting any further. The buyers have tried twice now. Now where stops? Stops are right below that low, right? And now we know that one nice strong red candle here is going to spook those buyers. And they're going to panic and they're going to get out. That's why you want to sell after 2 tries, right? 1 try, 2 try. Everybody's in. A strong signal candle says, all right, we're done. Now I can sell into stops. And then this will also apply to the S&P, by the way. We can now mark up that low, mark up that high, and we can again drill down and sell that first pullback. It's a 2-try reversal, right, off the high into a hidden channel pullback. Again, we're drilling down to a faster time frame. We're using the price action setups, the failures, the traps we talk about, right, in our quick start class. Okay, so we're keeping that in mind here to sell off this thing for tomorrow. Where would that target be, by the way? The target would be all the way back down to the pendulum swing, right, on the opposite side, right? So pretty easy job there as we go higher here. And I should also mention, too, if the market was to really rip, right, again, don't worry about where we are, right? Strong enough move going higher, shallow pullback, higher high in price, take that trade, right? Take that trade. I don't care where I am if we have a momentum. Right? It could happen, right? It could happen here, could be here, could be here. You know where I'm looking to trade, my setups I want here, and where the market wants to go here. So we're waiting for that as we go higher here. So we know how to sell this thing back down again. The hardest part right now will be if we go sideways here. Right, if we sit sideways, or let's say we go higher, right, we may go sideways up here, right? We talked about that strategy for the S&P, right? What do you do if it went up and went sideways? You'd find levels of support below the range, right? And you combine that failure pattern, right, off levels of support, and then again, right, trade that pendulum swing on the opposite side, right? We talked about that in the S&P. Same idea, right? Buy the seller failure, right? And then buy that up and over, that pullback as we go what? As we go to complete the pendulum swing on the other side. And we'll do that together tomorrow, obviously, right? We'll do it together. So, again, I'm just simply illustrating my ideas for tomorrow, right? And we'll let it play out and trade the play out tomorrow morning in the trade room. The hard part here is going to be if we go lower, right? If we go lower. Now, this will also apply to the S&P. The S&P is a lot more bullish, so it's not as likely on the S&P, but don't get me wrong, the S&P could easily tumble if the Nasdaq tumbles as well. The key is going to be if we go lower, that range is a magnet, right? That range is a magnet. If we go lower, what's the big problem? The big problem is now all these buyers who have their targets way up top here, they're going to probably get out, right? They're going to realize, oh, shoot, I'm on the wrong side of this now. And this will, chances are, accelerate pretty good. So we call this failed rotation, right? Basically, they fail to complete that pendulum swing rotation. So if the market rolls lower without completing that pendulum swing, that's a big red flag here for who? For the bulls, right? The buyers should be very concerned if this market collapses off the high. Now, it's not the end of the world because I have plenty of support down here, right? Support level, the trend line, support level at 72, right? Support level at 38. Plenty of support down here, right, to buy this. In fact, you could probably speculate and say, well, hey, there could be a channel there too, right? This could be one big, kind of bull spike in channel, right, from last week. So there's plenty of ways to buy this. In fact, you could also say, hey, right, the only time the market pulled back today was early in the morning. Maybe some traders missed that entry. They would love to buy it as we go lower here. We already know how to buy it as it goes higher. As it goes lower, what's my problem? What's my concern? It's momentum, right? I still want to buy because the range hasn't gone anywhere. It's not a breakout, right? What's a breakout? A breakout would be they have to hold that pullback and go. Right? Remember, it doesn't matter how strong the pullback is. Look how strong that pullback was, right? It doesn't matter how strong the pullback is. If they can't hold this thing and go, it's going to wind up right back to retest the high again. So as we go lower, what's my concern? Momentum. So what do we do when we're in a good location? I'd love to buy, but we're worried about who? The bears. What do? We give them 2 tries. Let them try once, right? Let them try twice. There's a bunch of ways you can take this trade. My favorite way is to grab that trap off the low. I can buy also into stop losses. And then don't forget, if it really snaps going higher here, now we have that pendulum swing, right? We'll update that pendulum swing, and I can trade that channel pullback, right, on the way over. This will be a great trade tomorrow, right? This will be a great trade. Again, it's a 2-try failure. Why 2 tries? Again, because momentum. And if you look closely over here, you can see that's what happened over here, right? Go lower, bears once, bears twice, and right back up again. That same pattern would be we'd be lucky to get that over here tomorrow, right? So big move down into an area of support, right? The bears come in, the bears try once, the bears try twice. We're trapping in those bears. We now know, of course, right? We get the trap low below there, stops right above that high, and then again looking to buy that first pullback off the low, right? So price tumbles overnight. The bears come out, they try to get short a couple times, once, twice, right? Draw that trend line, buy off that trend line, buy into stops right there. All those stops are sitting right above that high, right? I can buy into stop losses. And then again, mark that new channel and don't miss that pullback. Don't miss that pullback. That pullback is usually one of the best ones, right? 2 try failure, first pullback. Again, we're drilling down, right, to a faster time frame, grabbing the traps, grabbing the failures, the pullback, all the price action setups to talk about in that quick start class I keep mentioning. And then, of course, last but not least here, how do we sell it as it goes lower? Can we sell this thing as it goes lower? It's going to be tricky. It's going to be tricky. You would have to see a very strong move down. The only way to really short this thing as it's going lower without a breakout would be a strong move down, a shallow pullback, and a trap high. This is, this kind of falls into one of the categories of, if you're looking for that trade, you might have a hard time finding the follow-up trade. Like I said to my clients, when you're trying to go against momentum, you're oftentimes missing the with momentum trades. When you're trying to chase one direction, you're missing the other stuff. So this is definitely an option, but I'll tell you right now, it'll be a whole lot better to stay patient down here, wait for the bears to get in trouble and buy right into those stops here. Now to sell it though, how we do it? Got to get a strong move down, got to get that pullback, and they have to hold and jump. Right? Again, it doesn't matter how strong the pullback is. They have to hold that pullback to the moving average and then jump off the EMA. Once you get that jump and they keep going, now it's easy. Now we mark up that low, we mark up that high. We have a ton of momentum at that point, and now I can get short off the top of that channel. Again, drill it down, faster time frame for the entries. I cover all the entry setups right in that quick start class. Where's our target going to be on that short? Target, of course, is that 15,000, right? 15,014,996. All right, guys? Looking pretty good there. Again, I'm sure there are a couple things I missed. There'll probably be some variations tomorrow I didn't anticipate. But that's, of course, why our trade room is such a great shortcut for all you guys. So make sure you come out and join us every morning at the opening bell. Nasdaq Tech Tuesday, we are ready for you tomorrow. How about some gold? So gold in a nutshell is a big range right now. Right? Gold is a range. You can definitely tell that gold is waiting on something. It kind of feels like the combination of the Delta variant, the inflation, the Fed uncertainty. There's a lot of uncertainty, and you can definitely tell gold looks like it's a bit paralyzed right now with that trading range. The most important thing you'll notice, of course, is that range. And we are rotating back and forth. The one most common kind of aspect of this range is buy it low, sell it high, and try, if we can, to stay out of the middle, right, of this trading range right now. That's going to be one of the harder parts here for tomorrow, is staying out of the middle. I want to buy at support. I want to sell it, all right, sell at resistance, and I want to, again, stay out of the middle. Now, you'll notice I have that pendulum swing on here, right? I've marked up the amount above the range, the amount below the range. Really, this whole area down here is a beautiful spot to be buying off that low. This area up here, right, is a beautiful spot to be selling off that high. I just got to make sure I'm staying out of trouble in the middle. What I really like about this market right now is as we rotate off this high right now, right? As we rotate off this high, we may get one of those we call pendulum swing breakouts, right? Where they break through that pendulum swing, and we still have that big target down there, 1780, right? If this thing, as I mentioned last week, the technicals right now do look very bearish on the gold. Now, of course, I'll be looking to buy off the low. I will, however, have to bite the bullet and get short on this if the market does push below those lows here. Now, again, this channel really, there's not much you can do with this channel right now. This channel's not going to be very effective here for us. This is not a market that is bearish, right, into a trading range, has popped up and now trading lower again. This is not that market, right? This is not that market. The S&P, yes. The Nasdaq, yes. The gold, no. Right? The gold is a multi-day range right now. We have to respect that trading range. One of the biggest differences between a range on gold right now and a range in the market like the S&P or the Nasdaq, which is just a very short-term range, and we can play those pendulum swings. So how do I buy it? How do I sell it if it goes higher here? It's a relatively easy plan of attack. We have to just keep in mind momentum, right? So as the market goes higher here, if we pull back right now, that will be a failed rotation. Okay? If we pull back right now, that will be seen as a failed rotation. That means that the buyers are going to attack. Let them try once, let them try twice, and I can sell back down into that trading range. I'm looking for a 2-try failure to sell off resistance areas up overhead, right? We make a run higher. Buyers once, buyers twice, right back down in again, right? Maybe we don't. Maybe we trap, right? Buyers once, buyers twice, back down in again. Right? We'd like to be above the range here. I want to see buyers trying a few times and sell it back down. And then keep in mind, right, once we get that short going lower and the market does collapse now it's on. Now we know where they want to go here. Now you can mark up that low, mark up that high, and now I definitely can, right, trade that first pullback. Right? So again, as we go higher, and it could be really anywhere up here, right? It's buyers once, buyers twice, and then back down we go. And then again, grab that, right? Grab that first pullback. You can see an example back here, right? We go up, right? Buyers once, buyers twice, run lower, right? And there's that first pullback right there, right? So these are the things we're looking for, right? Over there, right? So as we go up, buyers try twice, we're selling back down with that 2-try failure pattern. Now, if we do go higher and the buyers actually can hold this thing now, remember, a strong move up is not enough for a breakout, right? Strong move up, it's got to pop and go. If they can hold that pullback and really go now, now we do have a breakout. Now that 1, 2, 3 breakout, the buyers actually hold. Now we get aggressive. We mark up that high, we mark up that low, and we get in right off that first pullback. Right? Remember, this is a 1500 tick chart in the gold. We're going to drill down to a much faster time frame. My favorite trades off the low of those channels are traps, failures, into pullback combinations. Right? Traps are always the best because they get you in the lowest. Right? Failures off the moving average. And then, of course, that pullback combination. We've talked a lot about those already today. And again, I go over all the small details of all the price action setups, how I find the entries, qualify the triggers, manage the positions. It's all covered in that quick start class, along with hundreds of examples of how we apply it to our favorite markets right in our trade room. Let's keep going, though. So now we know how to buy it, right, as it's going higher, and we know how to sell it, right, as it's going higher. What if it goes lower here? As it goes lower, the first thing to do is make sure you know where that trend line is. Then I know where this level of support is going to be. So draw that trend line down overhead, right? Get that trend line on. And then as we take out those support levels, great location to get long, but what's the problem? Momentum, right? Momentum is way too strong here for those bears. So how do you deal with that? 2 tries, right? Let those bears try once. Let those bears try twice. There's a lots of different variations of that entry setup. Traps work great, right? Trend line works great off of that low. Sometimes we don't get the trend line or the trap, and we're just simply buying right into stop losses. And then don't forget, as we race higher now, that first pullback is usually money, baby. It's usually very good. Right, especially if we can grab it quickly after that failure. 2-try failure, right? 1 try, 2 try for the bears. Great spot to get long, but momentum is a problem. So roping those bears, right? Let them basically dig their own grave down there. Hit them right where it hurts. Again, you'll see a lot of examples of these pattern setups in our free trading classes, right? Our quick start class. And then again, drill down to your faster time frame, right? And buy off of that low. Targets, of course, are going to be the other side of the range, right? Targets are always the other side of the range, and that pendulum swing all the way up on the other side. That's how we want to buy this thing, right, as we're going lower here. And then how do we sell it? We'd have to, first of all, get down to these lows, right? Get down to these lows, and then bears have to hold it, right? Got to hold it and go, right? 1, 2, 3, break down. You know the drill. Mark that low, mark that high, drill down to a faster time frame, and we're shorting off that first pullback. No, I'm not trying to short that first one, right? Shorting the first pullback is like buying that one up there, right? You never know how far it's going to go. A lot of times it'll collapse right back in your face, right? So be careful on that first pullback. But once we get the 1, 2, 3 breakdown, then I can definitely get aggressive on that pullback off the high. And again, targets, of course, right at that 1780 down below. There is a chance, of course, the market may collapse tomorrow if we did happen to get a very strong move down, right? Really strong move down. The market just falls apart. Something happens overnight. If you do that strong move down, that shallow pullback, that lower low, what does that do? It creates that FOMO, right? It creates that FOMO in the market, right? Strong move down, that shallow pullback drives the bears crazy because they want to get short. They want to sell the pullback, but doesn't give them much to work with. That lower low confirms the move. Traps, baby, right? That's exactly where you're looking to get short is that trap. And again, not required, but definitely helps. Find that low, mark that high, combine that trap off the high of that channel. And again, you know where that range magnet is as we go. All right, guys, again, stay out of the middle, right? If we sit here tomorrow and do nothing, wait for that pop, buyers once, buyers twice, back in, or we sit and do nothing, wait for that pop, do the buyers hold the pullback and go, it's on, mark that high, mark that low, right, buy that first pullback, right? Or do we see it go sideways and drop, right? 1, 2, back up in, right? Find that new channel. All right, I've gone over these pretty well, I think, here tonight. Tomorrow morning, though, don't forget, 8 o'clock Eastern time. I want to see you there with me here this week. We're going to trade this stuff together. Charts are all prepped up. Mindset's ready. Charts are ready. Hopefully you are ready to see me tomorrow morning, 8 o'clock Eastern time. I'll put all of the membership information you guys need, the description of this YouTube video. I'll put a big button for you right below me tonight on the trading blog. Hit that button or grab that link in the description and get registered for tomorrow's trading session. Don't be afraid to call the office. I'm always here if you guys have questions. So don't be stranger on the telephone. I got live chat on the left, live chat on the right, and there's always comments right available below here. So don't be bashful, right? Type those questions in if you guys have any comments along the way. All right, guys. By now, hopefully you subscribe to our YouTube channel. You better have hit that like button by now. I mean, all the way into this video here. Hit that like button. Make sure you subscribe. If I don't see you guys tomorrow morning at the opening bell, we'll come right back and we'll do it again tomorrow night on the next edition of our nightly newsletter. Guys and gals, as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.